This is RISKSA TV. We've come to the end of the second day of the PSG annual conference happening at Sun City. I'm joined now by the Chief Investment Officer for PSG Wealth, Adriaan Pask. Thank you very much for joining us. You spoke today a little bit, touched on the coming volatility and the need to position products for that. How is PSG doing that?
Well, essentially, we have a extensive range of product, the risk profile, across from everything more fixed interest for conservative investors to everything to offshore equity. So it really is a mandate-specific approach that we need to follow. On our more conservative mandates, we've very much followed an approach where we're cutting down on duration of portfolios to take away all the interest rate sensitivities out of it and position the portfolios to benefit from alternative sources of alpha. In our multi-asset portfolios, the equity portion is actually becoming increasingly important. So in that space, stock selection is incredibly important, and that's luckily been a very good source of alpha for us, while the fixed interest investments, largely on the cash side, has been delivering low returns. Bond yields have actually maintained levels where they are, although we actually expected them to kick up. So we've benefited from that call, but I think our view is for bonds to start depreciating in value and yields to kick up, especially in the offshore side. So our equity mandate offshore is what it is. You can position it more defensively, and we always follow a value strategy by finding fund managers and securities that will offer us a reasonable level of protection. On the multi-asset side, there again, we've steered clear of anything that's very sensitive to interest rate movements that could introduce volatility into the portfolio. So there again, cutting down on duration, rather lifting the equity portion a little bit and holding a little bit less diversified fixed interest portfolio.
There was also talk today. Yanni mentioned particularly the need to look for value and to find what are the next big growth stories. Where do you see opportunities?
Well, at the current moment, I think investment opportunities are actually quite scarce. It's a very difficult time in markets. Guys are complaining about equity valuations. Locally, property is looking quite heated. I've already mentioned on the fixed interest side there's challenges, but I think despite of that, there's opportunity in areas where some people might not be looking at the moment. So Europe is an area where we think the equities in particular have been depressed in terms of a valuation perspective. Apart from that, resources domestically, although the outlook is still very unclear as to where those companies are heading, from a valuation basis, we think there's probably very little further downside there. And if things pan out and the sector can recover, then there's a potential upkick there. So our positioning very much into value on both sides in Europe and domestically into resources.
Brilliant. Thank you so much for your time.